Hello friends, Assalamu alaikum, Namaste, Vanakkam, Sasrikal, Kamanachi, Kemcha, Ajama. I hope all of you guys are doing well. Today is a very short topic, where I'm going to tell about, how the rupee will further fluctuate against US dollar despite the ongoing war conflicts. I mean, this was also requested by one of my well-wishers and my close relative, how will rupee perform. I think all of us know, rupee has been very volatile in the last in the last 1 year, and right now it's trading at I think it was around 93 rupees and 50 paise. So what happens is now there's a demand for the rupee, and there is less supply of rupee. So what happens? RBI usually it pumps dollars into the. It sells the dollars into the market so that there's a demand for the rupee. So as they sell dollars, there's a demand for rupees. Banks, oil companies, they start buying rupees, and that's how the rupee gradually stabilizes. So usually India imports 80% of its oil from the Middle East, and we spend more than what we earn, so as part of the GDP. So if you see, there is an current account deficit, current account deficit, which is we all of us know, it's the difference between how much you export and how much you import. So the revenue which is generated out of those, it shows. So if you export more than the import, then okay, fine, you are a surplus. But yes, if your exports are less than what you import, then your CAD, which is called the current account deficit, it widens. So that's why you could see the way we are spending is more as a part of the GDP. So what happens right now, we are importing oil, and as we all have seen, due to the almost close to more than 45 days, the way oil prices have spiked, it's $100 a barrel. I think now it is today $97, $98, but yes, it went to 120 as I mentioned, and as high the price of the oil goes, the more wider our CAD increases. So that we need to understand. So that's why RBI comes in such a, or I would say, they help to control the, or I would say they would rather influence the pricing in the market. So they have their own mechanisms, which they sell dollars in the market so that they create demand for rupee. And when the rupee demand increases, naturally, there is more surplus of rupee. So yes, then it helps to strengthen, or I would say even stabilize rupee currency. So at this point of time, if the oil prices go high, it's a disadvantage, for any consumer, even the oil importing companies or the marketing companies like Indian Oil, Bharat Petroleum, Hindustan Petroleum. So they will have to import it at a very high cost. So that's one mechanism which RBI steps in, sells dollars in the market. They may have their forex reserves, so they will try to sell it, because at the other end they also know that the equity which have the equities or the foreign inflows which also have been invested into the stock market, they are also that's also being tapered out, because investors see the US as a safe haven for again turning or investing into those markets. So it's a very volatile situation also for the stock market. So I can drive or comment on that on our next videos. But yes, there is also another mechanism which RBI does influence the pricing of the rupee, which is called the NFD NDF, that is a non-deliverable forward market, where the markets, the trading sessions, they operate 24 hours, and these are in tandem with the Singapore, the Dubai, and the London markets. So what usually happens, they set a forward pricing. I think even people who are not aware of this, but I'll also tell, forward pricing is the today's rate what you fix for tomorrow's price. So it's basically you try to hedge in case your oil in case the exchange rate is today 95 rupees, and and in the next few weeks we don't know what's going to happen because of these geopolitical tensions and etc. And then the market may predict 96. So you have exchange at 95, you may predict 96, but then the RBI will tend to fix it around 95.4, 95.5, so that even if rupee depreciates, you are still safe. You will be paying to the 95.5 or whatever price was fixed. So that's why it's very crucial. Sorry, it's very crucial for RBI, that they come and they induce these kind of mechanisms, and they help stabilizing the economy. So right now you cannot cut interest rates because growth is slow, inflation is high, so there is no way of cutting interest rates. So they'll have to hold on. I think they have done. I think the interest rates right now 5.25% since last year. They have almost cut 125 basis points. So right now it's in wait and watch economy for India. So till the crisis gets settled down, we hope. I know there are a lot of still conflicts and a lot of escalations in the last 2 days, which both US and Iran could not find out a ceasefire. So that's why growth is always as I mentioned, growth will be very slow. And once rupee starts, appreciates, then there is a momentum in the market, and I think slowly, RBI will cut interest rates going forward. So right now, our GDP is also, I think, I would say, sorry, yes, the growth is almost, estimated at around 7.6 for financial 2026, and next year the RBI is predicting, it'll come down into 6.5, 6.7%. So it all depends on these external factors. So we need to understand that the currency does not play in isolation. I would say it's rather in sync, or they are affected by this geopolitical crisis, your oil price, and the global currency. So this is what I wanted to conclude today. I hope this video was useful to a lot of people who are not aware. But yes, I think it's a very great. It's very informative that people should know why and how, when will the rupee stabilize in this ongoing crisis. But yes, we have our own central banks who are stepping in, and they also maintain I would say they influence the markets, and they help to stabilize the rupees by these kind of mechanisms, by selling more dollars, or even by non-deliverable forward market. So they have the forward pricings, and it benefits everyone. I would say also, rather than looking at profits, yes, you at least have the tendency to stay very firm in the market. Even you lose a little bit of profit, but you are able to gain, or you are able to maintain that momentum. So that's very important in today's tough times. And yeah, I conclude this video. If you have any comments, any suggestions, please do drop it in my comment box. And yeah, please subscribe to my YouTube channel, and I will see you again tomorrow. Thank you. Take care.